Hello everyone, and welcome to day 5 of my online training video, Forex Trading Using Expanding Swings. I'm George Smith, and today is Friday, March 20th, 2009. Today I want to show you a day where prices don't go anywhere. They just swing back and forth, back and forth. Here's what it looks like on paper. This sort of pattern usually occurs after a free fall of prices like you see here, or a long run-up. Prices stop, let's say right there, rise to a point, fall again, and then they rise higher than the previous high, and they fall lower than the previous low. Once again, the previous high is bettered by this swing right here, and the low lower than the previous low. Whenever I see this kind of pattern, I start drawing trend lines like you'll see here. So this morning when I got up, I realized what prices were doing. Started to draw some trend lines. Once I'd finished all the trend lines, I placed my first trade, which is that blue square there, right around 35.40. Now let me explain to you what I'm trying to do here. Basically, I want to enter the trade at about 25% up from the low. I want to take a profit of 50%, and I want to get out 25% before the projected high. How we're going to do that is what we'll cover now. If you'd like to study this a little more, simply go to page 48 in your manual. Now here I am logging the high and low of this first swing. And over here where it's showing 60 and 60, this is just an estimate of what I think these swings are going to be like. With just a few more swings, this will average out. Now let's come up with some numbers. If we take the low and subtract it from the high of 612, we'll get a difference of 73. The new average is now 64. If we multiply that by 25%, we get 16. We could do all this by hand, but a quicker way is using the average calculator. Here I am placing the numbers 612, 539, and 60. And here's the same figures that I showed you earlier. Here's the next downswing at 450. If we subtract the low from the high of 612, we get 59. And a new average of 60, multiplying that by 25% gives us 15. Once again, we go back into our calculator. And keep in mind what we're trying to do here. We want to average out these swings by putting in the numbers and averaging them out so that we can use this to trade with later on. I know this looks complicated right now, and that's partly because the video is going so fast. But after you do it a couple times, you'll find it's really not that hard. What I'm showing you here is how the swings tend to expand as the day goes by and then taper off at the tail end of the day. This is important because it'll give us more confidence to make some profit on the next swing. Now let's review what we're doing here. If we take this previous downswing of 60 and subtract it from this high of 620, we get a target of 560, which was easily exceeded by the low of 537. If we then take this previous upswing of 65 and add it to the low of 537, we get a target of 602, and that was easily exceeded by the new high of 650. We would have made money on each of these swings. So now we're coming to the trade that we actually made, the first trade of the day. The previous upswing was 113 pips, which averaged out to be 81. Adding that to the low of 517 gave us a target of 598. We know that 25% of 81 is 20 pips, so we'll add that to our 517 low, come up with an entry point of 537. Subtracting the 20 pips from the projected high gives us 578. Now we know where we'll get in and where we'll get out. So here we are with our buy stop at 35.37, waiting to get filled. Automatically the exit point and sell stop will appear on target. Looking at these various lines, here's the entry point. Up here is our exit point, our projected high for this swing, and down below our exit point if we're stopped out. What I'm showing you here is the so-called wicks of the candlesticks. These are lines where prices either exhaust themselves or shoot up and fall back and form a large long wick at the top or the bottom of each candle. Along with my other indicators, this often tips me off that a change in direction is going to occur. Another thing I like to do is add to my position about halfway between the entry point and the target. Now I'm going to speed up the video so it won't take so long. Prices kept climbing and pretty soon closed out. Except an interesting thing happened. I failed to put in the stop loss and the target for my second position, so I had to stop everything and go back and replace it. Here it is getting filled anyway. Let me point out something else with this type of trading. I could have made a latitude line trade from this point to this line, or even this line up to this line, 20 pips at a time. Now once my target had been hit and I noticed a long wick forming, I got set up for my second trade. Everything looked pretty good for this trade. The moving averages were in my favor. The trading line at the bottom was rolling over, and here I was getting filled. Once again, my entry point was 25% below the high of the projected swing. Once again, you'll notice the long wick at the top of the candlestick right here. Then prices tried to rally again and failed to better the previous high, began to fall. Next, I'm going to move this projected high right here and move it down to make it my projected low for this swing. Once again, I'll speed up the video, and you can see here where prices failed to hit my target. The trading line at the bottom had also bottomed, so I moved my stop down to lock in 20 pips of profit. Now let's look at the accounting for this trading day. I'm not doing this to impress you. Rather, I want to show you the exact numbers that we used in our calculations earlier. Here's the original entry point at 35.37, and here's where we closed it out at 35.79. The add-on gave us 21 pips here, and then I made a latitude line trade, which was so fast I couldn't record it, and then our short sell from 82 to 61. This is the end of our training video for day 5. I hope I've been able to show you something a little different. Thanks for watching. I'm George Smith, and I'll see you again on our weekly videos.